Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and we have an awful lot to get into. Some of what we're going to cover briefly in this video, I'm going to be doing far greater videos on. I'm seeing a lot happening with Ethereum in regards to staking, in regards to the amount of Ethereum that was actually stolen by the FTX drainer, which we will talk about. We're also going to go over a whole array of news, but really I want to kick things off with this signal, this death cross that has been given by the MACD indicator on the 3-day time frame. Now, the last three, I should say two, since this bear market began, death crosses that we had on the 3-day MACD have all subsequently led to 50% sell-offs, okay? That puts Bitcoin at sub 10K. Now, is that on the cards? I believe so. We probably will end up buying altcoins and Bitcoin before that takes place, but I want to just explore this indicator and show you, and I also want to make this crystal clear. I've been trading and investing for long enough to realize that there is no silver bullet to it. And just because you get an indicator that has predicted something accurately previously doesn't mean that it is going to into the future. But I think that this is worth paying attention to. You guys know that we ultimately have, and I'm going to change it to the Heikin-Ashi candles here, we ultimately have significantly lower prices set for Bitcoin and the altcoin market. You know, we are waiting to pounce on that opportunity of a lifetime that I believe this bear market is going to offer, in the form of now having another chance to accumulate some of these revolutionary, life-changing cryptocurrencies at an extremely discounted rate from the bull market. But what I'm talking about here is I'm talking about the death cross that occurs on the and every time you have one of these death crosses, by the way, it does subsequently lead to further downside. You know, we had one here, which took a little while to play out. You had a slightly higher high. We had loads of divergences taking place there, and then you had this down. We're really focusing on the ones since this bear market. Even this one here did predict more downside. We have only recently just had one here. Now, remember, Bitcoin could do a really sharp rally up and potentially, you know, invalidate this. But the last three of these, and we're going to go ahead and mark them in, guys, have all very, very accurately predicted a 50% downside that ensued. And I'm here today to say we have all the hallmarkings of further continuation to the downside for the cryptocurrency market. It doesn't have to be 50%, ladies and gentlemen. It can be significantly less. But what we're going to do is we're going to work out from the signal to the bottom. This was a 48% move. Let's actually change it so that we can keep this on the, just something to bear in mind, guys. You know, we ultimately think based on liquidity, based on the macro sort of outlook of things, that it's a bleak one, you know, coming into the coming months. I think it gets worse before it gets better. And I think the cryptocurrency market, just like we looked at the unemployment chart, we looked at unemployment over the S&P and showed the correlation there and why this is one sort of reason why we think more downside is likely, based on the overall general economic outlook. You know, we know that markets actually had a bit of a rally based on the CPI that we got. This is as people try to look to reallocate capital to an ever-changing monetary situation. You know, you can see this sell-off here from, if we just take the low at the wick, from the last MACD 3-day death cross that we had. Death cross is very funnily named, I guess. And this, I have the 30 moving average on here, which I like to use. You know, for me, 30 is my favorite one. But the death cross that we've just had, is this potentially predicting? And you can also see similarities here where you sort of cross over. You know, moving averages aren't the be all and end all, and I certainly don't think they predict the market. But what I do think they do is give you a good benchmark of relative strength and weakness. You can see again here, you know, we've actually, it's almost been a weaker rally that we've had here. We've come right against it and we're rejecting, and we're now seeing that downside from it, certainly on the 3-day. And it does look like we potentially are starting another period like we've seen previously. And if we were to sell off 50% from where we were, we'll just give you a quick price for that and then look at maybe some historical context. You know, a 50% reduction, just to hit it right on the nose, takes you down to about $9,000 and takes you back into what I do think would be an extremely strong area of support. You know, you're kind of now in this void. This was holding us as support. It's now acting as resistance. So you can see it was support above it. We're now below it and it's acting as resistance. Let's take some of these off. You know, you can see that we're really in this kind of, remember these horizontal lines are the 3-day death cross. You can see that we're in this kind of zone. And I would say it's not that far out of the realms of possibility to suggest that Bitcoin may touch 10K depending on how bad things go. And I think you definitely don't, and this is something that we've also spoke about, let's move back to the normal candlesticks, you definitely don't consolidate for a period of 100 and nearly 50 days to break out a measly, we'll take it from the actual break of this, to break out, you know, 10% or so from this sort of range low bottom. You typically, when you consolidate for that sort of a period of time, there's often quite a bit of momentum that then follows, and you do have quite an extended move on the back end of it. So we do ultimately have targets for Bitcoin. We have targets for altcoins, which you can find on my Patreon for anybody that wants to join. Really, at the moment, we're just focused on scalping the market and trying to build up a investment and trading part. But the time to be an investor will arise again. But just worth mentioning, you know, this kind of death cross, the last 3 times that this has flashed up and the last 3 times we've had one of these in this bear market, and even if you look at the death cross historically, you know, it's often spelt and kind of been the precursor for more downside. And this is what I'm kind of suggesting may be taking place today. You know, even we longed yesterday, by the way, and we got them right, certainly on the day trading side of things, but even this is not, this is what I refer to as your golf ball, right? Finds the green, and then it does something like that, and then you get that further contagion on a shorter time frame from potentially what was your golf ball scenario playing out on a larger time frame. You know, we'd said that this is quite a likely outcome. You're just sort of losing momentum, and the buyers with each hurrah to the upside sort of wane a little bit more and a little bit more. We even did say you were going to get a final push before you get that spill, like prior areas. And we've also said, which kind of ties in with our confidence, that we do think there's more downside and maybe might back up the 3-day EMA. We've also said that where you are currently, this area over here, is very, very similar to the start of most capitulation events. You know, something like this is essentially what you're potentially doing. You're stalling here and you're going to roll to the underbelly of it. It's just a potential, doesn't have to play out, but in my opinion, it's a lot more likely than not. You know, ultimately, if you just moving away from everything that we've said, look at the sort of liquidity situation, look at the fact that, you know, if we have a fixed amount of money, which we know will change in the future as they turn the printers back on, because they'll have to, because they're going to break something, that money has now had to be reshuffled and is now going to have to go and go towards supporting a very overvalued heavy debt market at unprecedented levels. And we're seeing this, you know, Target just today warns of a weak holiday quarter plans cost cuts as profits tumble. We also, again, please go and watch my video where I looked at the unemployment rate in relation to the S&P as a kind of metric to weigh up, you know, where the markets generally are heading. I still believe that we haven't seen real capitulation for the stock market, ladies and gentlemen. We do have a weak dollar right now, but it's my opinion, and I'm going to say this very publicly, even though people think it doesn't seem very likely at the moment, that the dollar is going to do a similar thing to 2001. You know, we've seen this very harsh retracement. It's come back up. Okay, it's failing this 30-week moving average. But I do believe that it could potentially rear its head again and even put in a new peak in terms of a high. And I think that would really scare markets. We've also got a lot going on. We know this situation, of course, arose yesterday. Still trying to figure out what's happening here, but we're on very sort of sensitive geopolitical ground. Also talking about the dollar, UK inflation hits 41-year high of 11.1% as food and energy prices continue to soar. So we still actually see in the CPI that we had that food was one area where inflation actually wasn't slowing down. It was, you know, really the likes of, you know, used cars, oil, other things that have had a laggard approach. The thing is with oil, by the way, ladies and gentlemen, is it is popping its head back up now and potentially is forming some sort of a platform where it may want to make a move. And where it is currently is still rather stubbornly high. You know, you need to see further reduction in all these to really, you know, get on this idea that that's it for inflation and we've now got that cat back in the bag. I don't think that's the case at all. Moving on very swiftly, you know, I did say this was an action-packed video. Again, what effects is this going to have on the dollar? Well, the dollar's kind of like a dead fish at the moment, but again, I do believe it reasserts. I'm very much with Brent Johnson on his kind of theories here. This is some weird and wonderful Ethereum news. Ethereum devs, leaders, and influencers told their following that ETH staking withdrawals will be enabled 6 months after the merge. Then they moved the goalposts and it became 6 to 12 months. Then they said 2024. Who the hell is going to be waiting till 2024 for their Ethereum, guys? Now the ETH Foundation removes all time frames from their website. We know that the FTX hacker is now the 35th largest ETH holder. And of course, this is the hacker's address here, ladies and gentlemen. You can see he has a balance of $286 million that was drained from FTX. We still haven't got to the bottom of that. We covered FTX earlier in a video, just talking about Sam Bankman-Fried's potential comeback, if you will, and how it would be rather unspectacular and, in my opinion, wasn't going to work, given the fact that I don't believe people will lend him funds in the pursuit of paying people back. I just don't think that will work. I don't think an investor will buy that. However, maybe Kevin O'Leary will. All I've got for you in this video, guys, if you've enjoyed the content, a like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next one. Thank you very much for watching.